Good morning. This is Axel Merk, President and Chief Investment Officer of Merk Investments, with my Friday update here on the markets, what's happening around the world. And this morning, of course, we had retail sales numbers coming out plunging. And not surprisingly, obviously, the question is what are the implications and will they restart? Um, what sort of permanent closures will we have? And I understand one of the classic retailers was halted before before I started here, and they may well announce a permanent closure. That's not a prediction, not investment license. Let me get my disclosure out of the way as well. That sort of thing, though, will happen. And obviously, on the small business side, we may not see headlines when people shut down. The same with the restaurants that shut down permanently. And uh, and so. Um, on the bright side of things, of course, when you have these really terrible numbers, you're creating a base from which things can go better. And so the glass half full folks will point to that. The real challenge is, Stan Druckenmiller, I think, pointed it out, is what's the risk versus the reward, and many in the market are betting on all the easy money, getting things to float higher. The real challenge is if the economy does sputter on the way back up. I believe I mentioned it. I canceled a trip in September, late September, to a conference, not because I didn't want to go, but because the organizers moved the conference online. There were supposed to be, I believe, about 1,000 people there. And so that's a good blow to local economy, I would think. And you think about it, there's a flight, there's a rental car, there's a hotel. Um, Usually you spend more on food when you travel and when you are home. So that's all, and that's late September, right? And so that just shows how long this will drag on. Um, I was for the first time back in my office in several weeks. I had to take care of some quote unquote essential things, and it was a bit surreal. I not I would say I bumped into. No, I didn't bump into. I did talk to somebody who says he's been there all along, not in my office, a neighboring office. My own office has been completely empty for several weeks, um, but. And he said that nobody has been around. The morning traffic, I when I do go to work, I drive to work. It's around 5 in the morning. Um, the traffic wasn't that light, a tad lighter than on a normal day, but in the afternoon, the 5 o'clock traffic, so to speak, there was none. And so it shows that the folks leaving early in the morning, they obviously go for a reason. There are usually a lot of contractors, construction folks and so forth that go to construction sites, and since that is open again, that's there. And then what do you get for it? You get a little sticker that says, if you're sick, don't enter the building and line up here for the elevator. So that's what we get for sitting at home for several weeks. That was kind of my feeling when I was there. I was glad to see that one of my favorite lunch places was open, and we're glad to get a sandwich there. And they also sell wine, so I tried to boost their revenue with my enormous purchase of a bottle or two. Anyway, back to the kind of the broader economic theme here. Um, One of the things that was out in recent weeks was how the meat plants are affected in the U.S. and how Europe does it so much better. Well, there have been several outbreaks now in Germany, apparently, and that including a plant in southern Germany where there are 1,000 employees. That's a poultry plant, and 50 of them tested positive. And so these challenges are everywhere. Obviously, people handle them differently, and we can praise some and make others make mistakes. In the state of New York, Wall Street Journal had an article how recovering coronavirus patients were sent to nursing homes, apparently forcing nursing homes to take them. And surprise, surprise, there were outbreaks in nursing homes that didn't have any virus before, and that practice only stopped last Sunday. And so that's let's try to phrase this as neutrally as possible. By having a very decentralized approach, you do have, of course, all things of both genius and ineptitude play out at various levels, and you see some unconscionable things like that as well playing out. Um, so the market here. The market was down on the retail sales, but then came back with still down 15 points on the S&P futures. The Dow is down 100. 104 here to be more precise. Bonds were stronger earlier. Now they're a tad weaker. The 10-year is down 2 ticks. The 30-year 4 ticks. The Fed funds rate is at 5 basis points. But on the 3-month basis, the 3-month treasuries are at 11 basis points. 3-month LIBOR is at 39 basis points. When I started doing these online sessions here, they were, I think, at 135, 140, 3-month LIBOR. Well, the 3-month treasuries were already that low or even lower. And so this is starting to be in a more normal environment. Actually, it is almost normal. The kind of the rule of thumb is that the LIBOR rate is 25 basis points above the respective treasury, and we're almost there, right? And so that shows that there's a further reduction of stress in the markets. Crude is up today, and the about 1.2% for West Texas at 28.76 and 31.73. That's up 60 basis points for Brent, so that's moving higher. In the currency space, the euro had a little rally earlier this morning. We're currently at 108.33. We were below 108, and the euro is the best performer in the G10 right now. It's up 30 basis points. The weakest is the NOK today. New Zealand dollar is also weak again today. Sterling is weak. Talking about sterling, that's coming to be in the news again a little bit. Remember Brexit? The final goodbye of the extension agreement was supposed to be at the end of this year, and people saying that that deadline still stands. I don't think there's been much progress on the talks. They have been distracted with the virus, I would think. But this wouldn't be the first time that there's a last minute extension. So just from a political point of view, it's not really good to talk about it for half a year. Then just one or two other things. There's been talk about yield curve control again, and whether we'll do that. Yield curve control is when central banks are trying to control interest rates beyond the very short end, going out further and further. Different countries do different things with that. The Japanese go out to 10 years. The problem really is that central banks are really just zipping with a straw in the ocean. They do have an unlimited bazooka, but there is a limit to that unlimited bazooka. And the markets as deep as the US markets are, it is not feasible to fight the markets if it comes to it. As long as there's credibility for the Fed, obviously, yes, there is. And I'm not saying there has to be complete loss of credibility, but this is something that the market can bet against when you draw red lines, which it is when you say yields at some point in the yield curve has to be at a certain level. That's much easier to do at the very short end of the yield curve, but with a 10-year, for example, that's a fool's errand, because you're not only creating major distortions in the markets, you're really setting yourself up for failure at some point down the road. And so gold was up on the retail sales, has since come down. Spot gold is up $7 at 1737. Futures are up 390 at 1744, but they were higher. The futures were above 1755, and so that has come down. A lot of talk about gold, and because people are looking for diversification. Again, this is not investment advice, but where is this all going to lead to? Where is it all going to end? There are stories out again about how the weakest in the economy are not able to cope with what's happening here on all kinds of levels. I mentioned meat earlier, right? Meat is out, but specialty meats, farm organically grown at a multiple of the prices available. So if you have the money, you have access to meat, and it's all these little things that might have a political fallout in the medium term. The reason I'm concerned about that, and it is because we had this rise in socialist sentiment, and now we've more than doubled down on these policies that really exacerbate the sort of challenges that the weaker members in society are facing. And so I have no idea what the political fallout will be, but I don't think it's going to be pretty. I think that's it's going to be very, very concerning. And if you add to that we're spending trillions now, and so politicians are told, hey, we can spend trillions, and what can possibly go wrong? And so with all the, and I'm not suggesting that money hasn't gone to people that deserved it and whatnot, but on top of that, if you take this payroll protection program, by all means, many small businesses it's probably a lifeline, but I am all but certain, or I am certain actually, that people have requested that did not need it as well. And there is something called the Freedom of Information Act. Those recipients will be disclosed, will be available, and there will be coverage of companies that did not deserve it. And that goes just from whatever politics one has to say, hey, this particular industry shouldn't have reserved it, but to companies that were truly in okay shape, but applied for it anyway. And I know it because a lot of people encouraged me to apply for the program, and I've decided I'm not going to touch it with a broomstick. And I shudder when I think about what the political ramifications medium term will be of that sort of thing. Anyway, let me see. What else did I have? Talked about the retail sales and so forth. Oh, yeah, one big thing. Um, Transaction tax. You may have heard that periodically the talk of a transaction tax flares up, a financial transaction tax, for just a cent, a fraction of a percent, or whatever it may be, for every transaction that happens in financial markets. Let's tax that and get in some revenue. It is a wonderful idea, except it's a catastrophic idea because you can move your transactions elsewhere for the most part. And the European Union has thought about it, and then people said, "Oh, the idea is dead. It's coming back up." The reason I mention it is because in Germany they are again spending some money. What a surprise! Right now that people are spending money, they are raising they're subsidizing the retirement pensions of people who have um, worked many years, but who still have get a pension, then a Social Security that is very low. And in order to finance that, they have kind of verbally agreed to introduce a financial transaction tax, and it is also quite likely that this can only come to fruition if it's on an EU level. And so many people are saying this is dead on arrival, and it may well be. But let's not underestimate that Germany is quite the powerhouse in Europe and does have a lot of influence. And so if they have set their mind on that, it may well happen. And so the market doesn't seem to be concerned about it. And so maybe we shouldn't either. But part of what I see my role as is to get you thinking out of your comfort zone and to think about a few other things. If you see my eyes glare all over the place, it's usually because I'm looking at my screen. In this case, I can switch different screens, but in this case, it's my Bloomberg screen to see what else I can tell you. But I think I've covered most of it. So have a safe weekend and talk to you early next week. Take care. Bye bye.